90%. That's not a typo. Nissan just announced that 90% of every car they sell will have AI-powered autonomous driving features. Now, on the surface, that sounds like innovation, like progress, like a company racing toward the future. But here's the question nobody is asking. Is Nissan betting on AI because they see the future clearly, or because they're running out of options? This is a company in crisis, a company that's been bleeding market share, a company that watched its former chairman flee the country in a musical equipment case. And now they're telling us that artificial intelligence is going to save them. But here's what I want you to consider as we go through this story. What if this 90% number isn't about technology at all? What if it's about survival? What if the biggest announcement from one of Japan's most iconic automakers is actually a desperate attempt to change the conversation? In the next few minutes, we're going to break down 3 things that will completely change how you see this announcement. First, why 90% is not the ambitious number it appears to be. Second, what Nissan's competitors know that they're not saying publicly. And third, the one metric that will tell us whether this strategy succeeds or fails within the next 18 months. This channel exists to help you see through corporate announcements to the economic reality underneath. And Nissan's AI pivot is the perfect case study in why surface-level headlines can be dangerously misleading. Let me tell you what most people think when they hear this announcement. They think, finally, a Japanese automaker is taking autonomous driving seriously. They think Nissan is positioning itself as a technology leader. They imagine fleets of self-driving Nissans cruising through Tokyo, outcompeting Tesla, leaving Toyota in the dust. The headlines reinforce this. Long-term strategy. AI revolution. 90% adoption. It sounds transformative. It sounds like a company with a vision. And here's where the assumption gets dangerous. Most investors, most analysts, most casual observers assume that when a company makes a big technology announcement, it means they're operating from a position of strength. They assume that Nissan has done the research, run the numbers, and concluded that AI is their path to dominance. But that assumption ignores everything we know about Nissan's actual position. It ignores the restructuring. It ignores the cost-cutting. It ignores the fundamental question of whether a company that's struggling to sell cars today can suddenly become a technology leader tomorrow. The common assumption is that AI equals innovation equals success. But in business, timing matters as much as technology. And Nissan's timing raises questions that the headlines conveniently skip over. To understand why this question matters, you need to understand what Nissan isn't saying in their press releases. Over the past 3 years, Nissan has cut 9,000 jobs globally. They've closed factories. They've slashed model lineups. Their operating margins have been crushed. This is not a company launching into AI from a position of market dominance. This is a company that recently announced it needed emergency cost reductions just to stay solvent. And the timing of this AI announcement is not coincidental. It comes exactly when Nissan needs to change the narrative, when investors are asking hard questions about sales figures, when analysts are downgrading their stock, when the ghost of Carlos Ghosn still haunts every boardroom discussion. The information environment around Nissan is cluttered with negative signals. Declining China sales, weak North American performance, a brand identity crisis that's been years in the making. So when you hear 90% AI adoption, you have to ask yourself, is this a technology strategy, or is this a communication strategy? The question exists because there's a gap between what Nissan is announcing and what Nissan's financial reality suggests. And that gap is exactly where investors get hurt. That gap is where the real story lives. Here's what we can say with confidence. Nissan's AI strategy is real. They are genuinely investing in autonomous driving technology. They have partnerships. They have engineers. They have a roadmap that extends to 2030 and beyond. The direction is clear. Embed AI into the driving experience across their entire lineup. But here's where the answer gets incomplete. Having a direction is not the same as having a competitive advantage. Nissan is not the only company pursuing autonomous driving. They're not even the leader. Toyota has been investing billions in AI research through their Woven subsidiary. Honda has partnerships with Cruise and is testing autonomous vehicles in Japan. Tesla's full self-driving program has accumulated more real-world driving data than any competitor. So when Nissan says 90% of their vehicles will have AI features, the question becomes, what kind of AI features? Level 2 driver assistance that's already common in most modern cars? Or genuine level 4 autonomy that changes transportation? The answer appears to be somewhere in between, which tells us the strategy is real, but the revolution is not guaranteed. This is not a company leapfrogging the competition. This is a company trying to catch up while pretending they're leading. The first reason to be skeptical of Nissan's AI ambitions comes down to money, specifically research and development spending as a percentage of revenue. Nissan currently spends approximately 4.5% of revenue on R&D. Compare that to Toyota at nearly 5%. Compare that to Tesla, which has been reinvesting aggressively into AI and battery technology. Compare that to Chinese competitors like BYD, who are outspending Japanese automakers on electrification and software. Now, 4.5% sounds close to Toyota's 5% until you remember that Toyota's revenue is nearly 3 times larger than Nissan's. In absolute terms, Toyota is spending 3 times more on future technology. And here's the problem with AI development. It's expensive. Training autonomous driving systems requires massive amounts of data. It requires thousands of engineers. It requires partnerships with semiconductor companies, software firms, mapping services. Nissan's announcement sounds ambitious, but their R&D budget suggests they're trying to compete in a marathon while carrying extra weight. They can announce 90% AI adoption, but actually developing competitive AI requires investment levels that Nissan's current financial situation may not support. The numbers don't lie. And right now, the numbers say Nissan is outgunned in the technology race they claim to be leading. Now, let me address the counterargument, because there is one. Some analysts argue that Nissan's situation actually makes them more likely to succeed with AI integration. Here's the logic. Nissan has already committed to cutting 20% of their operational costs. They're streamlining their model lineup. They're closing inefficient factories. The argument goes that this leaner structure allows them to be more agile. They can integrate AI across fewer platforms more efficiently than a giant like Toyota that has to manage dozens of different vehicle architectures. There's also the partnership factor. Nissan isn't developing AI alone. They have alliances. They have technology sharing agreements. They can potentially leverage partners' investments without bearing the full R&D burden themselves. And here's the most compelling counterargument. Sometimes crisis creates clarity. When you're comfortable, you optimize for the status quo. When you're desperate, you innovate or die. Nissan's back is against the wall, and that pressure might force them to make bold decisions that comfortable competitors won't make. I don't fully buy this argument, but I respect it. It's possible that Nissan's weakness becomes their strength. But probability suggests that companies in financial distress rarely out-innovate companies with unlimited resources. Possible is not probable. So let me give you the full answer to the question we started with. Is Nissan betting on AI because they see the future clearly, or because they're running out of options? The answer is both. And that's not a cop-out. It's the economic reality. Nissan genuinely believes AI integration is the future of automotive. They're right about that. Every major automaker agrees that software and autonomy will define the next generation of vehicles. But Nissan is also announcing this strategy now because they need to change the conversation. They need investors to stop talking about declining sales and start talking about future technology. They need the market to price in potential rather than discount present weakness. The honest assessment is this. Nissan's AI strategy is directionally correct, but execution challenged. They're pointing toward the right destination, but they're starting the race with less fuel, a smaller engine, and more weight than their competitors. The next 18 months will be definitive. We'll see whether Nissan can actually ship AI features that matter. We'll see whether their cost cuts are enabling investment or simply delaying collapse. And we'll see whether the market believes the story they're telling. My view? Cautious skepticism. The strategy makes sense. The resources don't yet match the ambition. Here's how to judge whether Nissan's AI bet pays off. Watch 3 metrics over the next 18 months. First, actual AI feature deployment. Are they shipping real autonomous capabilities, or are they rebranding existing driver assistance as AI? The language matters. Level 2 Plus is not the same as genuine autonomy. Second, watch China sales. China is the world's largest EV and autonomous vehicle market. If Nissan can't compete there, their global AI strategy becomes much harder to fund. And third, watch the partnership announcements. If Nissan starts announcing significant technology partnerships with chip companies, software firms, or AI specialists, that signals real investment. If they stay quiet, it suggests the 90% number is more aspiration than execution. Here's the decision rule. Ambition is not achievement. Every company announces transformation. Few deliver it. For Nissan, the announcement is the easy part. The execution is what we're watching. And this is exactly the kind of story we'll continue tracking on this channel. Because understanding the gap between corporate announcements and economic reality is how you develop real investment insight. The next question worth exploring: how will Toyota respond? Because Japan's largest automaker rarely lets competitors claim technology leadership unchallenged. That story is coming. Make sure you're here when it does.